In this video, I will be sharing with you Richard Wyckoff's trading strategy that I have used over the past 3 months to make 15% or $500. So if we get on the screen right here, and I'll show you guys exactly how this strategy works, every single part of it, and how I use it to generate this profit. So right here, this is Richard Wyckoff. He is very well known in the trading community for developing his strategies, which is basically just following the current market trend and trading based off of these trends. And once you determine the current trend of the market, you're going to determine your place in the trend. So are we at the top of a channel, or are we pulling back into support, which is where we want to buy at? So right here, I'll show you, these are all the trades I have taken on the futures in the past 3 months that have generated me a significant amount of profit here. And this shows you that I trade this strategy well, and it does generate genuine profit over a period of time, following the rules and strategies to do those trades. So a big part of this is the straight line approach, which tracks the balances between supply and demand with straight lines along swing points. So if we get on the chart here, I'll show you exactly how the strategy works on the chart. So right here we have the NASDAQ futures, which many people trade. Everyone trades this. And right here I define Wyckoff, his strategy. So you determine the trend with the trend line. So when we're in an uptrend with the market, I basically always want to be trading longs. This strategy does work for shorts as well, but I don't love doing it when the market's in a very strong uptrend. So we draw the trend line on these swing points here. We see that the futures are in an uptrend. So once you know that the futures are in an uptrend, and you know that the trend line is support and the moving averages are support, you want to say, okay, where do I want to buy at? I want to buy at the support. So once we know this, we want to determine what our entry is going to be. So the entry that Richard Wyckoff and so many other people use is buying where most people put their stop loss.
The third rule is that I want to put my entries where the masses put their stops.
Which is a double bottom washout or a spring, which basically people like putting their stop losses at swings, and the institutional buyers want to get in at the lowest price possible, which is always going to be these liquidity pools where people have their stop losses. So if we identify this swing right here, we see that it comes in at support where we have the trend line and we have the moving averages. So once we know this, we know that we want to buy here. So once we get into this area, we look for a certain pattern to play out. Like, we wait for the washout, then we wait for a reversal pattern, we get long, stop loss underneath the low here, and target the highs. So you can, whenever I do this trade, I'm looking for 4R to 7R trades, and it's very common to get 5 to 6 to 7R with these setups. So this also works for stocks, obviously. So right here we have NVIDIA, areas that we can buy at. So areas that we can buy at are after an impulse up and a pullback to the trend line and support. And this is going to be, here's an example right here. So we have this swing right here that was a low, a swing low, and then we have all of this overlapping support from previous swing highs that became support once we got above them. And then we get a pullback into this area here, right here, and we have all the moving averages here. And once we see this, we can zoom in, get long on the reversal, target the highs. So this ended up being a 9R trade here, and I'll show you guys another example of a great trade on Rich Tech Robotics, which has been doing very well recently. So if we draw the trend line on here, we see that this has been an uptrend as of late, and we know we want to buy on the pullbacks at support on a double bottom washout or a spring. So we draw this line here, and we see that we have a swing right here. We have the moving averages all coming in here, and we have a overlapping swing high that came to support, and then we have a 50% retracement, which is extremely powerful. People want to be buying at the 50% retracement because they know it's a great price. And then we zoom in, we get in on the reversal here on the 30-minute, and what we want to do is target the highs or just higher, and this is anywhere from a 10 to shoot almost a 20-yard trade, and I'm sure that it's going to continue higher. So this Wyckoff trading strategy is an amazing strategy that everybody uses. Everybody wants to get in at the double bottoms where all the institutional traders are buying at, and I'm going to continue to use this strategy, and I hope you guys consider using this for your investing and trading to see a significant profit. Thank you for watching.